Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited, as usual, to welcome you to yet another edition of the Forex Morning Mastery. My own name is Sheriff Daramola, and for the next 40 minutes, I'm going to be your host, taking you through the current market structures as we take a fresh new look at the market using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of these assets on our watch list. So far this week, we have been monitoring three major assets, which includes the US All Spot, the GBP USD, and of course the XAU USD, which is popularly known as the gold spot. And in fact, we've been doing pretty well across most of these assets, as the last 96 hours has been quite interesting as we took advantage of some significant movement in price action, and we are going to be deliberating on that today. We are going to be reviewing our positions. We'll see how to manage our existing positions and of course use the information we have on the chart to strategically position ourselves ahead of the London and the New York session. For those who are joining us for the first time, you're highly welcome on board. And what we simply do here as technical traders, we gather here on a daily basis in anticipation of both the London and the New York session, where we review our existing positions, run through the current market structures to identify patterns and structures that we can use to position ourselves ahead of both trading session. So we basically deliberate on the 1 hour time frame, which is our execution time frame. And in fact, if you do want to have a background knowledge of how we got to the point we are on the 1 hour time frame, then I encourage you to watch my videos, which I normally share during the course of the weekend in anticipation of every new week. The links of these videos are right in the description box of this current video you are watching, so you can check them out after the session so you can have a background knowledge of how we got to this point, how we were able to identify our key levels and patterns we were using to guide our decisions for this week. And these videos also could serve as an educational guide to understanding how to use price action to identify potential trading opportunities. So I encourage you to be part of the session. Stay tuned in so you don't miss out on any of the ideas we are going to be sharing today, and of course be part of the subsequent editions, as the more time you spend with us here, the more you get to understand how this works and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, you are highly welcome on board. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do in this community is to go through the economic calendar, as we need to know what majority in the market are looking forward to in terms of the fundamental aspect of the market. And of course, we know now that these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. Now, if we look at the economic calendar, we normally focus on high impact event from economic dockets that affects the assets on our watch list. And for this week, we are going to be looking at events from both the United States and the United Kingdom. So normally we focus on high impact event. I don't know why this is, so I will just take all these ones out. as we are only going to be focusing on the United States and the United Kingdom. Now, to make things a little bit more clearer, let's include only the medium and the high impact events. So let's see what we have here. All right, so for today, Thursday, October 5, we do not have any high impact event to look out for. But from the US economic docket, we have a handful of speeches coming in from policymakers. And we also have the challenger job cuts and the initial jobless claims, which is coming up in about 3 to 4 hours respectively. Now let's look at what the challenger job cut is. So it's a data from the labor sector, of course. And for those who don't know what this event is all about, so I'm trying to load up the, hold on a second, I'm not sure why. So I'm trying to load up again. Please hold on a second. Let's see how this goes. And now again, it comes back to, all right, so let's redo the filtering. So I'm going to exclude other economies and focus on the United States and the United Kingdom. So like I said earlier, we need to know what we are looking forward to, as the anticipation of this event has an influence to move price action, giving us clues on what to look out for ahead of this event. So like I was saying earlier, in the next 3 hours from now, we are going to be looking forward to the Challenger job cuts, and this is released by the Challenger Gray and Christmas. And it's a monthly report, of course, and it provides us an information on the number of announced corporate layoffs by industries and regions. The report is an indicator used by investors to determine the strength of the labor market. Now, if we look at the previous month, for the month of August, it came in at minus 75,151, which we do not have any consensus yet, so there is nothing to compare this actual data. But in this case scenario, we might likely be seeing a consensus a couple of hours into the event. So we're going to be looking forward to how that is going to play out later today. Then we also have the initial jobless claims for the month of September. So here we have the previous month coming at 204,000, and the consensus are projecting a 210,000 for the month of September. Now, the initial jobless claim is released by the U.S. Department of Labor, and it is a measure of the number of people filing first-time claims for state unemployment insurances. A larger than expected number indicates weakness in the market, which influences the strength and direction of the US economy. Now, if we look at this data here, consensus are projecting a higher figure compared to the previous month, so it shows us a sign that the labor market is a little bit going contraction. There's a little bit of contraction in the labor sector there, which is not something promising for the US dollar. Now, we also have the Fed's Mester speech, and then we have Fed Mester is the president and CEO of the Federal Reserve Policy, and what are the projections as regards to interest rate decisions for this month. And everyone in the market will be looking forward to this event, as any sensitive statement here has a tendency of spiking price movement. Now, with the information we have gathered on this, on the economic calendar here, let's dive right into the chart and let's look at things from a technical standpoint, hereby using price action as our basis to understand the psychology of the market participants in that current structure. So now the first asset we are going to be looking at this morning is going to be the US All Spot. And for those who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as regards to how we are going to be managing our position on the US All Spot for today. And one thing I would like to say here is that the US All Spot, despite the selling pressure we've noticed here since the beginning of the week, it has been on our own favor as we took advantage of this bearish momentum right since Monday, and we continue to ride that momentum all the way to the downside, giving us over 970 pips in profit, roughly about 1,000 pips already on this asset. And for everyone who had been part of this profitable journey, well done and kudos to you for being on standby to capitalize on this move. Now, for educational purposes, let's run through how the week started for us in this community and what led to the idea of us selling this asset. Now, if you look at the structure, let me zoom right into how the week began for us all. So at the beginning of the week, it was observed that hold on a second, I don't know what's okay. So it was observed here that price was initially confined within a range that was between the $90.40 level and the $89.80 area, which further emphasized the level of indecision in this market. And of course, you know how we do it in this community. When price action falls into this phase of uncertainty, giving us a flat channel to work with, we exercise patience, waiting for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And at the beginning of the week, we initially had a buy position which actually moved about 50 pips thereabout before the bearish momentum began taking us out of that position at a worst case scenario break even. Then we saw price drop significantly to the downside, breaking down our key level situated at the $90 area. So we saw the breakdown happen here, retest of structure which triggered our first sell position, and since that moment we have been selling the US All Spot. Now, during the course of yesterday's live session, we were around here during our live session yesterday. We were just right around that $88 area, which interestingly shares a confluence with that descending trend line. And one of the things we agreed here yesterday is that as long as price remains below that descending trend line, we'll continue to hold on to a bearish bias, hereby looking out for more selling opportunities. And we also mentioned that the only condition that will make us consider buying the US All Spot is for price to breach that descending trend line, which of course never happened. Now, we mentioned here yesterday that if price goes on to break down the support line here, it was a support line as at yesterday's trading session, the $87 area, that a breakdown of the structure will be welcoming more sell position. And if you look at what happened since yesterday, you will see how price dropped over, how many pips was that? Over 390 pips in our favor. That's tremendous. So even if you are not part of the beginning of the week with us, if you took advantage of yesterday's trading session, you would have scooped in close to 400 pips. Now, for everyone who had been part of this profitable journey, well done to you for being on standby to capitalize on this move. Now, the next thing we want to be doing right now is to ensure that we secure all our current positions, as anything could happen around this area. And from the way things are going right now, I will be suggesting that you give enough room for price action to breathe, and anywhere above the $84 area and the $85 zone seems most appropriate to move all stop losses to, while we continue to monitor price action. Now, with this situation marked out with a well-secured position right now, what is going to be our next line of action for today? Now, like I said earlier, for those who are with me on my TradingView and Telegram platform, you will have gotten an update on what we are going to be doing today. And one of the things I noticed here is this $83.10 level. Now, let's look at what has been going on here since the later part of the New York session yesterday. Now, one thing we observe here is that as soon as price got into the zone, we begin to notice some buy pressure resume around this area. And every attempt by the sellers to break through that area has consistently been negated by the buyers and giving us a support line to work with for today. Now, the question going into today's trading session is, will this support line continue to negate selling pressure? Will it be a platform for a retracement of the impulsive bearish momentum we have been witnessing in the last 24 hours? Or are we likely going to be seeing a breakdown of the support line to incite another opportunity to sell? Now, the $83 level is going to be a major a significant parameter that we are going to be using to guide our trading decisions for today. Now, if we are going to be adding more sell position, then we want to be selling at the breakdown of the $83 area, which of course would have taken out all the buy positions around that area to further emphasize the strength of the sellers in this market. However, if buy pressure continues above the $83 area, then we might likely be seeing an opportunity to do a counter trend opportunity. But personally, I wouldn't be taking advantage of any counter trend opportunity based on the way price action had been playing out in the last 4 days. However, if you are a counter trend trader or you are a stage of that counter trend opportunity, and if you are going to do that, how do you want to explore that opportunity? Well, if you look at the structure here, we have a resistant line around the $83.80 level, which you do want to be marking out. This is for counter trend traders, please. $83.80 level. So you do want to be marking that level out. Now, what you're going to be doing here is to wait for the breakout of that structure to capitalize on that move. So something like this breakout, retest for confirmation, then we want to be part of that uptrend move. Now remember that yesterday at the beginning of the week, we acknowledged a bearish trend line. Let me extend this trend line out a little further so that it can capture the future of this. So remember at the beginning of the week, we acknowledged this descending trend line after price tested that high at a $94 area, and after connecting the series of lower highs, we have this trend line to work with. And of course, you know how we do it in this community. As long as price remains below that descending trend line, we shall continue to hold on to a bearish bias, and any buying opportunity below the descending trend line is considered to be a counter trend opportunity. Now, for those who are going to be taking a counter trend opportunity, if price does break out of the $83.80 level, to be ensuring that you're on standby to move your stop your position as price moves up. It's in time to take over the market, determine what our next line of action will be. Now, for us who have been selling, that is long-term traders like me, well, if price gets into this trend line and continuous selling pressure persists here, that is, we see signs that buyers are finding it difficult to break out of that trend line, then the appearance of any reversal pattern there, like double top, head and shoulder pattern, rising wedge comes in here, we want to be joining the downtrend move to the downside. However, if price breaks out of that trend line, then this could be a signal that we are getting ready for a bullish momentum. Now, in this case scenario, this will be the first time price will be breaking out of that descending trend line, at least in the last 1 week. And if this happens, we will need some confirmation like retest of structure to join the uptrend move. Now, trust me, I will be with you in the comment section to give you updates if price gets into this area, so we can mark out patterns and structures we are going to be using to guide our decisions once price gets into that zone. But in the meantime, our center of focus is basically between the $83.80 level and the $83.10 area, where depending on where the breakout happens will decide what our next line of action will be. Now, considering the sell position here, which I'm of the opinion that price might likely continue to the downside, there are two ways to which we can capitalize on that opportunity. So let me zoom right in so that we can see clearly. For those who have been with me for a while now, you all know how we do this. Now, for those who have been part of this profitable journey since the beginning of the week and you have stop order below the $83.10 level to capitalize on a downtrend scenario. Now, the reason why we are doing this is simply because we are ready right now, but I'm still, if you are new with us and this is your first time taking a position on the US All Spot, then I encourage you to remain very patient, waiting for confirmations to happen before you jump into the sell position. And what you want to be looking out for here is a breakdown of structure. Then price comes back to retest the level on our lower time frame where we see signs that buyers are finding it difficult to climb and stay above that $83.10 level, which will reflect on the chart as continuous selling pressure around that area. Then we can join that bearish move. But if you are profitable so far this week, you don't need to wait for all that transition. Just place your sell stop order and allow the market to play out from that point. So these are my views here on the US All Sports for today. So our center of focus is basically between the $83.80 level and the $83.10 area. So let's see how the market would react to the zone, and of course this will give us an idea of where we are going for today. So this is my view here on the US All Spot. If you have any questions or you need me to do any clarifications or any further clarifications, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. Hello, Muffin. Good morning to you. I see your comment in the comment box. You're asking how will the round number look like on gold since the decimal point is two numbers away. Okay, I think you are referring to the trading tip I shared earlier today as regards to that. Well, round numbers are just numbers that ends with 0, 5, as human beings, we are psychological beings, of course, and we think when we price in the market, we think in round numbers. So for the gold now, in the case scenario, now okay, let's look at this one on the US All Spot, for instance. If you notice how I identify my levels, you will see that most of them are always in round numbers. Now look at the support in 83.10. Now look at the resistance line there is at 83.80. So these are round figures, and the reason why I normally identify round figures is basically because as human beings we price and transact in these figures. For instance, if you want to buy a commodity or an item and they say the price is $200, for instance, if you do want to price it and negotiate, you will price at maybe $150, $100. You won't price at $199, of course not. You will not price at $149. You will always price in round figures. So that is why I always emphasize that we put more importance on round figures instead than the random numbers like 9 ending 9 and 8. So your example there at 1889.00 level is a very good example. It could also be 0.10, it could be 0.20, 0.30, 0.40, and in fact it could be 0.45, 0.25, 0.35. So I do hope I made myself very clear there. If you still need further clarification, please let me know in the comment section. So I do hope I made myself very clear, Muffin, and glad to have you around with us. All right, so in the absence of no questions, I want to assume that we are all on the same page here, and all I've said so far has been well comprehensive enough. So with that being said here, let's dive right into the next financial asset on our watch list for today. So the next asset on our watch list for today is the GBP USD. Well, on the GBP USD, we had a buy position finally triggered yesterday, and I'm of the opinion that the market is taking advantage of the retracement in the US dollar yesterday, which was incited by the weaker than anticipated US ADP employment change data that came in yesterday, which came below expectations, of course. And there is another rebound in the United Kingdom Services PMI data, which further bolstered the pound sterling at this point. But things are still looking very skeptical for the pounds at this point in time, considering the long-term bearish momentum we have, and the pound is still under a very strong pressure. Now, let's look at things from a technical standpoint here. What is really going on in this market? And for those who are with me on both my TradingView and Telegram platform, I gave an update this morning as regards to how we are going to be positioning ourselves for today. And I acknowledge that we had the buy positions running. We had 2 buy positions running in the last 24 hours, roughly about 60 pips thereabouts, and it appears sellers are gradually gaining momentum back again. And if you had moved your stop losses accordingly, like I said this morning, you must have been taken out on all the buy positions at this point in time. Now, let's run through how the week started, what happened at the beginning of the week, and what led to the decisions we made so far this week. Now, at the beginning of the week, it was more of selling the GBP USD, as you will see here that the first thing we observed was this flat channel between the 1.22080 level and the 1.21760. Now, you know how we do it in this community. When price falls into this kind of indecisive phase, in this kind of range, we exercise patience, waiting for either the breakout or breakdown of that range to give us an opportunity to trade. Now, we saw what happened here on Monday. Price did break down the support line at the 1.21760 to trigger our first sell position. And remember that we also added more positions at the breakdown retest of the 1.21200 area, giving us more opportunities to maximize the potential of the bearish move. However, during our live session yesterday, we acknowledged that there is an indecision in this market as price action was trapped within that range around the 1.21 and the 1.20600 area, giving us a clue into the uncertainty at that point. And if you remember vividly, we were looking forward to the ADP Employment Change and the ISM Services PMI to have clues into what our next line of action would be. And one of the things I made mention here yesterday is the continued buy pressure around the 1.20600 area, which gives us an insight into how it has become difficult for the sellers to break through that area. And one thing I said here yesterday is that the only condition, despite the long-term bearish momentum we have in this market, the only condition that will make us consider selling the GBP/USD yesterday was for price to break down and retest the 1.20600 area, which of course never happened. And I told us that the continued buy pressure around the 1.20600 area has a tendency of breaking out of those descending trend lines we identified at the beginning of the week. Now, let me show you what I was talking about here. So at the beginning of the week, we had a beautiful descending trend line, which we duly marked out after connecting the series of lower highs. In fact, we have a couple of them here. So we have the first one right here, and then we have the second one right here. Now, what we were saying yesterday is that we will need price to break out of those trend lines for us to feel comfortable buying. And as a result of this, we said we will be positioning ourselves just right above the 1.2100 area to capitalize on that uptrend move. And you saw what happened here yesterday. In fact, during the live session, I think we had our buy position triggered and price moved up. We added another one more at the breakout and retest of the 1.212. Price moved up a little bit before this bearish momentum began. And of course, if you had moved your stop losses, you must have been taken out of the position right now. So well done to everyone who took advantage of this move, though it's not that significant at all. But it's okay. Let's see how the market is going to be playing out today. Now, with the information we have on this chart, what is going to be our plans for today? Is there chances that buyers will continue to push price to the upside, or are we going to be seeing a bearish momentum here? Now, to make things a little bit much more clearer for us today, I would like to scale up to the 4 hours time frame, as there is a structure there that we will be using as a reference point for today's trading session. Now, permit me to scale up into the 4 hours time frame. So I'm trying to load up my chart on the 4 hours time frame, and it is taking quite some time for it to load up. Okay, here we go. Now, on the 4 hours time frame, for those who had watched my video on the GBP USD, where I did a top-down analysis on this asset, the links is right in the description box below. On the 4 hours time frame, after taking into consideration the nature of price action throughout the course of the month of September, it was quite clear that the momentum was a strong bearish move. And to further emphasize this bearish momentum, we saw our price action transitioned into a descending channel. Now, if we connect the series of lower lows, we have the support line of that descending channel. And when we connect the series of lower highs, we have the resistance line of that descending channel. So you will see our price had consistently and uniformly transitioned within that range throughout the course of the month of September, giving us a beautiful range to work with. Now, if we zoom right into the current structure, you will see that despite that strong bullish momentum we noticed yesterday, as soon as price got into the resistant line of that descending channel, which interestingly shares a confluence with the 1.21800 level, we saw selling pressure resume around that area. Now we have a resistant line which is serving as a barrier for buy pressure at this point. So what I'm going to be advising us to do here, because price is respecting that descending trend line one more time, is for us to look out for selling opportunities, while we also hold on to the buyers that buyers could come in at any point in time. Now, how do we intend to do this? Let's see on a lower time frame. I would like us to listen attentively here. It might look a little bit complicated, but it isn't if you take some time to listen carefully. And in fact, if you have questions, please feel free to let me know in the comment section. I'm very willing to make things a little bit much more clearer for us. So right now, price is up around that resistance line, respecting it one more time, probably with the intention of pushing price to the downside. And in fact, we have something like a double top structure right here, giving us a reversal pattern in that regard, where the breakdown of the neckline may be around here. We have a neckline around this 1.21350. Hold on a second, let's label that area 1.21, as you will see here. So we have the neckline here, which appears to be a little bit broken to the downside right now, but it's not sure it's broken yet because this candle is still running and it still has about 9 minutes left for it to close. Now, will this breakdown turn out to be an opportunity to join the downtrend move? Well, it may be. Let's hold on and see. We want to see retest of this 1.21350 to join that bearish move. Now, the reason why I want us to keep the idea of a bullish momentum open is because of how price reacted to the support line of that range here since the beginning of the week. Now, you will see here that sellers have been struggling to break